okay, we'll lose a few young people who don't have a lot of money, but we'll keep all the boomers, and maybe we'll even get some more boomers who say, oh yeah, well, those whippersnappers and their Ponzi scheme Bitcoin, we don't want that.
The whippersnappers.
So we'll see. My guess is in the long run, and Eric Balchunas said this, right? He did the math. There's $30 trillion controlled by advisors at these big allocation shops.
It shocked a lot of people 3 years ago when the world's largest asset manager became interested in Bitcoin out of the blue. Bitcoin has been the most well-known altcoin ever since it was created. When BlackRock asked the SEC to let a spot Bitcoin ETF happen, it broke the ice. Wall Street has seen nothing but bad things happen with Bitcoin. BlackRock CEO Larry Finn, who used to be against Bitcoin, called it a global asset that could protect investors from falling currencies in another interview. He also called one of Bitcoin's rises of flight to quality further. He said that people all over the world were eager to buy coins. Finn has stuck to what he said and kept promoting Bitcoin since then. According to Sin City Crypto, the founder and CIO of Morgan Creek Capital recently talked about alleged plans between the SEC, BlackRock, and large financial services firms like JP Morgan to heavily infiltrate the cryptocurrency industry in order to change prices. Yusko says that the SEC would have only accepted BlackRock's application and put off all the other applications until much later. This is because the court ordered it and the whole thing was made public. We'll now play parts of the interview where Mark Yusko talks about Bitcoin ETFs and how the bad plans have been thrown out. After you watch the whole movie and give it a thumbs up, don't forget to share your thoughts and ideas in the comments. Thanks for looking at this.
I was wrong, right? And that's okay, because it's not a bad thing to be wrong about. But I really did believe that the SEC was going to king make, right? Now, my own theory is, had they not been slapped on the wrist so hard by the judge in the Grayscale case, they might have. Now, easy for me to say that because we'll never know. But, I just think they got slapped really hard, not once, but twice, by judges for abusing their position. And I think they just couldn't risk it. So the easier thing was just say, all right, everyone who's in the queue, fine, we're going to prove y'all. And they did do one thing that I think is a little interesting. One of the criteria for gaining approval was you had to have an AP, and I should remember what AP stands for.
Authorized participant.
Authorized participant, thank you. So, and that happens to be one of the bigger groups out there. So, look, in many ways, I still believe that this process of approving the ETF and having BlackRock be the biggest has ties to an ill-fated, I will say, attempt to control the markets, right? I don't know if you've seen the clip of the guy who runs the Chicago Mercantile Exchange saying, we'll tame Bitcoin. Like, you will not tame Bitcoin. Yes. Look, and the reason he says that is, for years, any commodity that has futures has been subject to manipulation.
Yeah.
Right? If in the old days, if I had a barrel of oil and I wanted to sell it to you, I actually had to have title to that oil. I had to be able to go produce that actual barrel of oil, deliver it to you. You had to have facilities to take delivery, and we could have a transaction. And then they created the world of futures. And now I can create a paper barrel of oil out of thin air. Like, literally, there doesn't have to be any oil. And I can promise to deliver you oil. And as long as we settle up the transaction before the date, I don't have to go find the oil from somebody and buy it. and deliver it to you on some tanker truck and send it up to Chicago. And so what happens is you get naked shorting on the other side. You can have naked long. You can get, what's that, creation of many, many, many paper barrels out of thin air. And what eventually happens in all these commodity markets is you get a big supply-demand imbalance caused by the creation of these paper commodities. And you've seen it in oil markets, you've seen it in grain markets, you've seen it in the gold market. I mean, the gold market is famous for this, right? All the GLD longs, I shouldn't say all, many of the GLD longs are just offset by shorts from JP Morgan and Rothschild Bank in London. And they can manipulate the price of gold. And the thing I love about it is they said, oh, they're not doing that. Like, well, JP Morgan actually admitted to doing it. They actually paid a fine of $960 million, almost $1 billion 2 years ago. But I love their comment. They're like, yeah, we paid the fine, but we didn't have to admit guilt. I love that part. You can pay $1 billion and not admit guilt. But funny. We made $20 billion, so it's like a cost of doing business.
Even though there is a rumored plot between big financial firms, our senators, and regulators, Yusko is sure that spot Bitcoin ETFs have been and will continue to be good for Bitcoin and other cryptocurrencies. According to the famous hedge fund manager, at least 1% of the $30 trillion that financial advisors currently control will be put into Bitcoin. He does admit that the process might be slower than expected, but he is sure that it will happen in the end.
And my belief, I'm entitled to my belief, I believe the original plan was they were going to punt everybody else, give BlackRock the go-ahead. BlackRock was going to accumulate these big positions. The banks, the JP Morgans, et cetera, would take the other side, short the futures. And part of the reason people think that the launch was a failure is that's precisely what happened for the first week. Right? You had the people come in before. We went from 40K to 47. We had that nice parabolic rise. And then you had the launch. And it was interesting, very underreported. I tweeted about this, but no one cared. There was a launch of a second futures contract precisely on January 11th, the exact same day as the approval of the ETFs. So you basically had a whole bunch of people shorting futures against these longs. And you had the liquidation of GBTC shares because they had high prices and people who didn't have a tax problem were like, I'm out and I'll transfer. So you had a combination of factors that pushed prices down. People were like, oh my God, it's a failure. Like, no, you're missing the forest for the trees. You bring up the point, right? There are groups, Fidelity being one, and eventually all of them, have said, we're going to put in 1%. Now, Vanguard, Bank of America, Merrill Lynch, LPL this morning, UBS have all said, nope, this is still too risky. Now, what that is code for is Ms. Warren called them up and said, do not allow your clients
Is that confirmed,
to use their own money.
Is that confirmed?
Come on. I mean, if you look at the largest campaign contributors to Ms. Warren, you will find a stunning similarity to the largest financial services companies in the country. There's a link between those institutions that said you can't buy an asset with your own money. This is the dirty little secret of banks and brokerages. Once you give a broker your money, it's no longer your money. It's their money. And they can permit you to make trades if they so desire, but they can also prohibit you from making trades. And so I think a lot of people will leave places like Vanguard, UBS, Merrill Lynch, because they realize, wait a second, what do you mean I can't buy this thing that I want to buy? The flip side of that, I think, is interesting. Someone said, well, okay, that's all well and good, But what Vanguard's doing is actually intelligent. They want to be the boomer firm, right? They want to be the low cost, boring, no speculative assets. And therefore, what they're saying is, okay, we'll lose a few young people who don't have a lot of money, but we'll keep all the boomers. And maybe we'll even get some more boomers who say, oh, yeah, well, those whippersnappers and their Ponzi scheme Bitcoin, we don't want that.
The whippersnappers.
So we'll see. My guess is in the long run, and Eric Balchunas said this, right? He did the math. There's $30 trillion controlled by advisors at these big allocation shops. If 1% comes in to Bitcoin through the ETFs, that's $300 billion on an asset that trades about $10 billion a day. That will have a massive price impact. It will also solidify the long-term kind of penetration of Bitcoin into financial services. But most importantly, what it'll do is it'll sop up all of the incremental supply from mining for the next few years. And I made a big statement, and I might not turn out to be right, but I still made it. I believe this year, in 2024, more fiat will be converted to Bitcoin than all the previous 15 years.
Wow.
The news from Fidelity got a lot of people excited about Bitcoin and may have helped the current rise. According to the news, Fidelity Investments Canada has added a 1 to 3% Bitcoin allocation to its all-in-one asset allocation funds, which include spot Bitcoin ETFs. The company thinks this is a cheap solution that follows an integrated strategic asset allocation model and regular portfolio rebalancing. According to the company's announcement, the Fidelity all-in-one conservative ETF is strategically allocated to offer a balanced investment approach with a mix of about 40% stocks and 59% bonds. Many people on Twitter praised the decision to add an extra 1% to cryptocurrencies. Senior Bloomberg ETF analyst Eric Balchunas talked about how important it was for a conservative fund to include cryptocurrencies, saying that it showed a very positive view of Bitcoin. Others said this was a big step forward that would make it easier for other banks to follow suit. Tell us what you think about Mark Yo's talk, especially what he said about BlackRock. The SEC and JP Morgan. Also make sure you hit the like button a lot. Follow the link and turn on post notifications to see more movies. Thank you for watching.